First off, let's get to Trish and the newsroom. Trish, a quick question before we get to our guest. We have the dollar near a one-week high ahead of the FOMC meeting and, of course, the G20 meeting later this week. And what's going on there?
Well, it seems that market was a bit cautious in the past 48 hours, rather, on concerns that the Fed could possibly signal the timing on the end to its quantitative easing on buying back of mortgage-backed securities. And also, we have the G20 meeting later this week as well. And markets are a little bit nervous that, central banks might come up with some plans on the timing of the exit of quantitative easing, monetary stimulus and fiscal stimulus, and this is taking a check on risk appetite, especially in the stock markets, translating then into the currency markets as well. But having said that, we are seeing markets sentiment pretty resilient. The Aussie and Kiwi is still stronger. Asian currencies, the ones that are open, a lot are closed today, but the ones that are open, including Singapore, are still firmer this morning. The market seems to have a bit more traction. They're keeping the hopes up that the next after the FOMC and the G20 are out of the way, the rally in global risk appetite will continue.
Okay, we'll see what Peter Redwood has to say. Peter is here with us. He's head of Emerging Asia Research at Barclays Capital. Risk appetite back?
To an extent, yes.
Why so?
I think people are definitely still going after higher grade credit and equities, and on the back of that we're seeing currencies tending to outperform the dollar. But I think people are being fairly cautious about the outlook because of the uncertainty around the global growth scenario.
Peter, Trish here. Now let's like to have a discussion on your currency calls. Now, the Indonesian rupiah, a lot of people's favorites, including yourself as well. It was up about 12% so far this year, and followed by the Korean won, which was up to, quite far behind, about 5% only year to date. But in the third quarter, we are coming to the end of the third quarter, we see that the Korean won has overtaken the Indonesian rupiah. It's up about 5.68%, while the rest of the rupiah was up by 5.6%. And more importantly, we're seeing that the Singapore dollar, the Taiwan dollar, Thai baht even making a bit of a comeback. Are you planning to change your call on your currencies?
No, not at all. I think what we're seeing right now in Asian currency markets is a generalised but relatively small bout of strength. If you look at the performance of most Asian currencies over the last few weeks, yes, they've broken out of their ranges, but they've done so in an environment where the dollar is weakening, and they've actually underperformed most of the G10 currencies. The only countries that have really held their own against the G10 are the likes of the won and the rupiah, and to an extent the Indian rupee. We think that dynamic is likely to persist for some time. Really, we've got to see the Chinese renminbi starting to move in a meaningful sense before we see a significant bout of Asian currency strength.
When do you think it's going to be the time to get back into currencies of open economies, such as those of the Singapore dollar, the Taiwan dollar, even the Malaysian ringgit?
Well, it depends on how you want to structure your position. Obviously, for people who are at the more retail end of the market, it's very difficult because of the capital control restrictions and also the fact that most of those buyers tend to just buy the NDFs outright. But within option markets, there has been opportunities in various option structures taking advantage of the fact that the central banks are intervening and pushing volatility in the foreign exchange market lower. So things like double no-touch, reverse knockouts, those sorts of structures have actually performed quite well, and we think that they will continue to do so. We think that over the course of the remainder of the year, once the Chinese start moving, these currencies will start trending, and then we think that while the MAS is